Hi, everyone, and thank you for listening. My name is Sean Dole, and I'm a senior in the AIM program covering domestic financial services. This week, along with Ben Lempereur and Christian Wilber, I'll be presenting Blucora Incorporated, ticker BCOR. I want to begin with how I found the stock. I looked for a company that was tilted toward fintech, but wasn't valued as richly as many of the fintechs in the market now. In my screenings over the past couple semesters, Blucora has popped up multiple times. I like their story now because its valuation has been severely cut as they go through a shift in their core business during the pandemic. Still, they have both company-specific and macro tailwinds that I think make them an interesting pick to consider. Blucora provides tax-focused financial solutions through two segments, Avantax Wealth Management and TaxAct Tax Preparation. Avantax offers wealth solutions for independent financial advisors to make each advisor a comprehensive financial service center for their clients. As of June 2020, they had $61 billion of client assets under management and advisement. The tax preparation segment, TaxAct, enables the filing of digital tax returns for both consumers and tax professionals. Blucora was founded in the late 1990s as a search and content company. They stayed within this space and the e-commerce space until 2015, when they began making a strategic transformation into a technology-enabled financial services company. Even through making acquisitions of tax and wealth management providers, management struggled to find a consistent strategy. Then, in the beginning of 2020, the board named a new CEO and an almost complete replacement of management ensued. This team refocused their strategy on their competitive advantage, being a tax-focused wealth manager. They completed a key acquisition of HK Financial Services and did a bit of house cleaning by making a $270 million impairment on goodwill. This impairment and the impact of COVID-19 have driven the stock to a low valuation. Still, they have strong historical growth in both wealth management and tax preparation that they can build on. So, because of their turnaround strategy, adopting a more stable business model, and the growth of their industry, it is recommended that Blucora be added to the AIM Small Cap Fund with a price target of $12.48, representing an upside of 25.46%. Now on to my drivers. First, this is a turnaround story. The new management team came in this year and focused the company's strategy on their key differentiator, being a tax-focused wealth manager. Prior management had created many disruptions with clients, so they wanted to focus on client service and relationships as well. One of the first strategic shifts they made was with TaxAct. They shifted the marketing focus and invested more in product development to give consumers a better experience. This had immediate benefits, which you can see on the table to the left. New users rose substantially, and total e-files rose for the first time since 2014. Going forward, management's more focused strategy will lead to a return to their low-teen revenue growth rate and a better chance of sustained growth. The second driver is a stable business model. Now that management has a focused strategy, operational changes will be more targeted and therefore less volatile. The business will likely be smoother for both employees and clients, and management can try to key in on some synergies that have not been exploited. First, the acquisition of HK Financial Services gives Blucora a wealth management business that is complementary to Avantax. By offering slightly different services, they will appeal to a broader market, which will help them scale and lead to accretive revenue growth. Similarly, Blucora's integration of tax and wealth management software increases the efficiency of many CPAs who are also financial advisors. Blucora can cross-sell their different segments to many of the same clients, saving client acquisition costs while increasing appeal to these clients. Finally, many of their financial advisors are CPAs, and the company believes they can get some of their tax professional clients to also join the advisor business. Overall, these synergies have the potential to expand operating margins closer to their peer average of 20%. In fact, even if their operating margin was only 10% in 2020, that would have implied a share price of about $14. Finally, the third driver has to do with the industry's growth. Focused on tax solutions, Blucora has positioned itself in a niche part of the wealth management industry. Over the past couple of years, they came out with product offerings on a tax-smart investing platform. As the emerging robo-advisor industry continues to grow, Blucora's digitalization platforms will become increasingly important to traditional financial advisors. These advisors will be looking to digitize parts of their business, and Blucora can do that for them. On the tax preparation side, the growth of professional clients has been strong. This is an area where management believes they will continue to see growth as more people shift to digital solutions. This overall shift to automation and digitization should lead to an increasing growth rate in both Avantax and TaxAct revenue. To start my valuation, I used a 6-year DCF. I projected 6 years because of the large impairment in 2020 expected numbers. Using a WACC of 8.69% and a terminal growth rate of 1.5% produced an intrinsic value of $12.67. For my relative valuations, I used an EV to EBITDA multiple and a PEG multiple. I used a PEG instead of a PE because of the depressed valuations across the financial sector and because I felt Blucora's PE didn't accurately reflect their growth potential. Weighting these models 60-20-20 returned a price target of $12.48 for a total upside of 25.46%. Moving on to risks. First, because of the COVID pandemic, the IRS extended the 2020 tax deadline from April to July. This caused Blucora to incur higher seasonal marketing expenses in Q2. Another wave of COVID or lockdowns would lead to more uncertainty in the tax business. Second, this longer tax season also forced some of Avantax's advisors to focus more on current clients than acquiring new clients. This could have adverse effects on the wealth management business going forward. Finally, the tax software business is highly competitive and is dominated by a couple players. On the wealth management side, robo-advisors are increasingly gaining market share. This high level of competition could make it difficult for Blucora to appeal to the mass consumer market. To begin the company's turnaround, Chris Walters was appointed as CEO in January 2020 after serving on the board for 6 years. He had previously served as a senior partner with Activate, a strategy consulting firm focused on accelerating the growth of technology and digital business. Mr. Walters brought in multiple executives, including the new CFO, Mark Melman. Todd McKay was appointed president of Avantax this year after having been with the company since 2015. While the management team has not been together for long, they've held the business relatively stable during the pandemic, and their effectiveness is vital to Blucora's long-term success. To wrap up, Blucora is in the early phase of a turnaround story. They are in a growing industry with lots of opportunity and now have a management team that seems to have a clear and effective strategy. 2020 has been a very tough year for the company's operations, so it could make a great entry point into this story. Thank you, and I look forward to discussing any of your questions.